Hello and welcome. It is Wednesday, the 7th of June, 2017, and an original chart, or one that I've put up or put together, the first logarithmic scaling of the extra bytes. And this is a 3-hour time frame. No dates on the bottom, but it represents the last 30 days or the last month in time. This high around 727. I probably should have put it in, but that's the approximate area, which coincides with this low. But the key numbers I'm going to talk about is the low of 230, where it came from, up all the way to 1737 in Satoshi. That's how many Satoshis it's going for at least the key points. And from the bottom, how can we explain the story? Well, this line, which is roughly around 500, was resisted in here, and then it was supported for roughly a day, one full day of supporting 5 and resisting about 5.5. And then once it broke, boom, shakalaka. It was just over. Up, gone. I mean, there was no stopping it until it got to the 1500 key number. And I was stating when it came to previous high. Okay. Here we are. I mean, we could come back here and make some sort of cup and handle. No. We don't do that. But if it doesn't and it just keeps going, watch out for it to go to the next key level. And the next key level is not 1,000. No, it's 1,500. What happened at 1,000 here? Oh, resisted a little bit and then came back. A small scalp if you can get it. But other than that, not much of a move. And then 1,500. Yeah, that's a pretty decent call, I would think. So therefore, what has happened since the top? Well, it was a very fast move, and when markets get overextended, they're going to have to correct. So far, the stages of the correction had the first immediate one from 1,600 and change down to about 800, a 50% loss. Boom, profit taking. And the market shoots back higher, back to where it was, and barely piercing above, stabilizing and holding the 1,200, this area, for a little bit of time. And then, since this area, there's one leg lower that shoots up to a lower high, and then another decent leg lower, and that's it so far. 2 legs lower since the high, and 3 sets of profit taking since the big high, because this is still one decent set. Since here you had 1 profit taking on this high, you had your second, you had another leg lower in here, or this was the third comparable to this, but you still had another leg lower, you had 2 decent sell situations that occurred to the similar point where it states today, or where it is at now, yes. So just because it came down to a key Fibonacci point, which is in at 798, and 750 is a better number, and I like to go a little further, a pierce extra on the test, which is again the case here, usually is 750. Now those who bought here, this was an obvious buying spot. And if you did, congratulations, you've gotten instant gains. And if you were playing that on just a very good day trading level, very smart. If you're just trying to accumulate some of the best prices, you got in at a good price. But you still could get in here. I've seen a decent amount of people with buy orders in around these levels. And, well, if this breaks down, that's where it's going to go. And how badly do you want to buy at 650, 660 if you know it's going to go to 500? I mean, that's not a guarantee, but the odds are if it does go to 620-ish area, it could even come down closer to here. But myself, I would probably want to be closer to 560, 570, because I realize what's the big difference buying at 570 versus 500. And then, of course, if you're looking at it, check the order books. And it's a way of holding Bitcoin. If you're holding Bitcoin, you're like, yeah, okay, I got Bitcoin. I'm happy going long Bitcoin. But if a situation is to occur where I'm able to buy at this price, 5 whatever number, then yeah, I want to buy so many tokens. And that's what the whole purpose of a buy order is. And that's how I like to look at it as well. If you're holding Bitcoins, wanting to go long on it, which is a great idea, then why not put them in buy orders for amazing situations? It's just one way of looking at it. Now this resistance level here, roughly in at around 1250, 1275, that area there. Very big actually. You can see it was resisted here, supported in here. If it can get above and hold, stay above this area, then that would give you some reason to say, okay, this thing might have already had the correction that it's going to have. And then breaking here, well, we're probably going to see, well, where you go from point low to point high, then you go low, which is a higher low, then you go to a higher high, then you go to a higher low. So where would the new higher high be? Above 1737. And well, we can put the Fibonacci calculator together. And this is the lows and the highs. So there's a 498, 802, which also shows the irrelevance of 1078, which has been very much a key number lately as well. But for this, we're going to take the high of 1737 and a low of around 700 that it went down to, which was it closer to 7 or 7.5? Yep, 700. So there's an up target at around 3,000, 3,046. So it's more psychological at 3. And you do see they pierce it, but I would be thinking on a break above here that we should encounter some sort of resistance area level at around 3. It could be higher, who knows? And there's going to be situations that occur where I'm going to come up with these levels and it's just going to keep on going higher. Because if this didn't resist 1737, or if, say, for example, we have this bottom in here, and instead of going red down here, say has a green candle like this here instead, this thing could have shot up to like 4,000 in like a day. That's what can happen. So let's assume it takes a week and a half or 2 weeks even to get to 4,000, 3 weeks. Normal moving trends, up here, down for 3 days, up for 4 days, all that type of stuff. And it takes, I don't know, maybe 3 days to get its last good move. And then there's no resistance. Next thing you know, it's 10,000 the next day and it's up 150% in one day. Because if you're in an area where you're supposed to encounter a big area of resistance or support and you don't, the fast move. Sort of like in here, you were supposed to encounter it, boom, quick move higher. All right, then, that will conclude the analyses of this particular chart. I hope you have found this helpful, insightful, educational, entertaining, or whichever other adjective you prefer to use. And take care.